but also the numbers of KEC International were flashing for you on your screen. That's the bottom line figure for you, 78.5 crores versus close to about 63 crores. And in terms of the profitability, it's about 200 crores sales. It's about 200 crores higher at 1550 crores versus about 1350 crores. Stock is a bit weak, so down about 0.5%. But in general, it's turned out to be a pretty stable quarter for KEC International. We'll wait by for more on their profitability or their margin picture. But as of now, we've got it's a stable set of numbers. We've got the management waiting to speak with us. Ramesh Chandak, the MD of the company. Afternoon, sir, and thanks for joining us. Could you quickly tell us what the EBITDA margins were for this quarter?
This quarter, the EBITDA margin are 10.1 minute. Just 10.5%, I think.
Okay, and for this next year, so could you tell us what's the kind of operating margin level that you would like to see, and also your revenue growth?
No, next year definitely, because we are coming from a very robust order book of almost 7,800 crore. And actually the growth next year will be much higher. But so far the exact numbers are concerned, normally we don't give the numbers, so I will not be giving the numbers exactly what will be there, but we don't give the guidance.
So if you can update us on your order book and whether there's been any kind of slowdown from the order inflow from PGCIL?
No, actually there has been an increase in the order flow from Power Grid, and this year we have received almost 800 crore of order from PGCIL. If you really look at the order book, our order book, as I mentioned, is about 7,800 crore, and very large order is also from India, and which includes about 800 crore of orders from Power Grid.
Sir, if you can tell us, among the water business and the other segments, which one do you expect to be the highest, growing segment for you? You have cable, railways, S8R and water. So water, of course, is a small segment right now, but which one do you expect to be the high growth area for you in the coming few quarters?
See, definitely SAE as well as water. They are their base is very small as of now, but they look very promising, and I am very confident that both the businesses will grow this year quite rapidly. Similarly, cable growth, because unless our new plant of Baroda does not come up, they are running at 100% capacity. So naturally, the growth in cable this year will be very limited, and growth will come only next year. That will be very substantial once the Baroda plant comes into the operation.
Mr. Chandak, you spoke about your current order book, but any kind of deals that are in the pipeline, how much can your order book grow by, and also the kind of demand that you're seeing from international, because international revenue sources, because you have orders coming in from South Africa, Brazil. Could you throw some more light on that?
No, see, whole market, even the US market, Brazil market, South Africa market, looking very, very promising. Even the Central Asia is looking very promising. Number of tenders we are bidding, but ultimately, as you know, that it all depends upon unless we don't receive an order. But we are seeing a continuous flow of the orders coming in, even from Southeast Asia, which was not very aggressive which was not very big for quite some time. We are seeing some orders coming from Southeast Asia also this time. Particularly Laos looks quite good.
Okay. And internationally, do they operate on higher margins as compared to your domestic?
No, margins are same in the range of 10%, ma'am. And I think when we look at a large number of orders, look at a mix, normally the margins are around 10%.
And on account of higher interest costs, do you expect any kind of margin pressure going forward on your business?
See, definitely there will be a pressure on interest. There is no doubt about that. But what we are hoping that with the good order book we have, we should be able to absorb the interest rates and still maintain our 10% margin.
All right, Mr. Chanda, thanks for joining us. So that is KEC International, stable set of numbers, about close to about international margins operated about 8 to 9%. Their operating margins for this quarter have come in at about 10.5%, and they have seen a growth of about 13 crores in terms of their profitability. Let's get into a very short break. Market still stable, still strong. We'll come back with more on the market.